All right. Good morning and welcome back to today's trade setup. It is 27th of Feb 2024 as we push into the early Europe session. And as far as the trading room is concerned, we are holding a couple short positions in gold, a couple short positions in the euro, uh, long in the dollar index, and short in the indices. All right. Yes, we are quickly approaching the end of the series. This week is going to be again critical for specifically for the larger trends to take shape in the indices, and also I'm looking forward for a turn lower in the Euro USD. Let's do some long-term as well as short-term wave counts, see what euro could be possibly doing in the next few trading sessions. We would still go with the preferred wave count of the impulse which was complete earlier. Followed by a corrective decline, expanded flat corrective wave, wave 2 in the picture, and going forward it is 1 of 3, possibly 2 of 3, and is it the third wave in progress? So that's one of the preferred wave count. The alternate count could be the preferred wave count is bullish. If the third wave is underway, the prices would ideally stay above 1.1 or 1.0450, and it could just pull back a bit and resume its rally above 1.1144 going forward. That's the bullish one of the bullish overviews. Believe it or not, there is an alternate count which I would not want to ignore, is that the third wave got extended here. Alternate 3 and alternate 4 was a triangle. That brings us to a termination. The impulse wave actually terminated around 1.1275. And then you've got the first corrective wave, alternate A, alternate B, and alternate C, which would be larger degree wave 2. Also, don't forget the 61.8% retracement of the entire rally between 90950 and 1275 is seen somewhere around 1.02. That also kind of completes a neat little 5 up and a 3 wave decline. Also in terms of symmetricity and wave A equal to wave C an analogy, I think it looks quite possible that we still have uh, enough room on the downside. So now the question is, how how can we expect prices, or how would it take shape for for prices if they are wanting to take the alternate route. One of them is wave the lower degree wave 1, lower degree wave 2 is in the making, and then we have lower degree wave 3, 4, and 5. That's an impulse. And the other view is wave C would either be an impulse or a diagonal. So if it is a diagonal, then wave 2 would still go higher with 3, 4, and 5. So we are looking for a dip and then a rally. And then again a turn lower. Or it's going to turn lower from here itself. Because if you look at the price action from 1144, let me just remove other drawings. If this is an impulse, it looks a potential impulse. It could be an ABC as well. I can see an ABC as well, A, B, and C, and then A, B, and C. So it is quite possible that we've got wave 1 here, 1/A, (2/B), which is the 38.2% retracement of the previous drop. Quite a bit possible that prices may turn lower from here as well. And that's the reason why we are contemplating short positions active right now, at least towards 1.0750, which is again the 61.8% of that rally. So if it is going to continue lower, it can go on. But then if it's a Gartley in the making, normally, prices always form a Gartley before resuming its larger degree trend. So if the Gartley is in the making, then we'd see a bounce from 750 again, possibly towards 1.0980, and then a turn lower. That would make the entire structure look quite symmetric as well. All right, so lower from now, it could continue lower towards 1.02 if the alternate count is correct or is unfolding. Otherwise, we would turn long from 750 onwards if the third wave is unfolding higher. All right, that's the story in the Euro USD. Let's have a look at the dollar index on a daily chart first. Again, an impulse lower. The preferred counts first. ABC higher. That's a larger degree wave 2 in the making. And then we've got wave 1 of 3. Potentially wave 2 of 3 terminates around 10470. And the third wave is underway, lower. This is the preferred count, and the alternate could be as follows. Alternate 3, triangle 4, and alternate 5. That is the impulse, followed by an alternate C could go above 107 to terminate or complete the larger degree wave 2. All right, so not here, but the larger degree wave 2 is planning alternately to push higher towards 109, possibly even higher actually, not just 109. It could be 111 as well. So either way, is if it is going lower, then we sell on a pullback and then continue lower as the third wave unfolds, or we would review a situation around 102.50 just in case that is a wave 2 termination, followed by 3, 4, and 5. All right, if you look at the extension of wave A, then that should also be pointing towards 111. You see, that's a simple extension, not an Elliott. We can try the Elliott as well. So you can go, the 1.27 is around 110. So it could be 110 and 111. The 88% and the 1.61, which is wave C, runs all the way towards 113. And if we apply the wave principle in terms of equality, 99.45 until 107.50, so that's 8 complete points. 100.60 plus 8 bring us to at least the 61.8% mark. All right, so that is the story. We remain long in the dollar index for now, and then we'll review a situation of price action around 102.50 again. All right, that is the story for dollar index. Gold now. Okay, since we're on the daily chart, let's do the larger degree counts again. So we've already had, this is the fifth wave in at the larger degree unfolding. And that is 1 of 5. So if we got wave 2 of 5 as well, then the third is in progress. All right, now the only ambiguity is this part. If it is unfolding as a triangle, then it has to terminate above 2008 to not break that rule of an impulse. But if it is not unfolding as a triangle, and if the corrective wave 2 is still progressing, that could be in an expanded flat in the making as wave A, wave B, and 5 waves to wave C. 1, 2, 3, 4, and 5. That completes the entire correction, and possibly it's moving towards 1800, if not lower. So maybe one more push higher and then lower. Right now we are short in the because on the lower time frame an impulse has completed. If you count waves from here, let me take the text first. Got wave 1, a shallow wave 2, and then we count 5 again. 1, 2, 3, 4, and 5. Is it wave 3? Question mark. Yes, possibly. And we also have potential wave 4, and then we've got wave 5 as well. Probably we're not breaking any rules. We go by the extension as well. We were close to the 0.61.8%, was around 2047. Price is carried all the way towards 204142. That's okay. Not always it happens that prices touch the Fibonacci extension exactly. Most of the time it does, but it's not a thumb rule though. So structurally, a third wave extended, wave 4 and wave 5 possibly complete. So are we looking towards a pullback or a corrective decline? The answer could be yes. So this is the story for gold. We are looking for price action to tick lower. 3 up, 3 down, 3 up, and possibly 5 down, at least towards the previous wave 4 vicinity, around 2016, possibly even lower towards 2007. That would be wave B or 2, and then a sharp rally again higher up. All right, so that's the story. We're short right now, then we turn long, and then we again turn short. And now next is the Dow Jones. It's an amazing story here, being scripted with all the divergences in place. So straight away, the daily chart with all the divergences. Let me bring up the RSI first. If you notice this peak, which is 29th of January, that was a divergence, but this peak, sorry, where prices rallied, you see the new high, but then RSI not printing a new high. That's the end of December 2023. Now we are almost 2 months after that. We've got at least 1, 2, and 3 peak, but then the RSI has been declining since then. So it's a great divergence story here. All right, that's it goes without saying. I mean, we have made money all the way without doing anything when we see divergences, whether it's bearish or bullish. What I'm trying to say here is the strong bearish divergence case, and the second one, if it is an ending diagonal, right from here, wave 1 of the diagonal, wave 2 of the diagonal, wave 3 of the diagonal. Ideally, wave 4 of the diagonal should drop lower back towards 38,700, 800 zone, and then wave 5 higher up. That brings us possibly to the end of the week, and also the ending diagonal structure completes. So either it's a diagonal or it's an impulse, but we have, I mean, Sometimes suggestions are of a hedge. We moved our stop loss in this case, but either a diagonal or an impulse, but we're just about one wave away before a massive reversal occurs. But we need to see a price break below 38,342 now for that to happen. All right. One last chart is the VIX. Amazing, isn't it? All new highs being printed in the indices. VIX holding its ground, possibly the third wave. We've done this exercise more than 10 times now. That is wave one. I'll use an arrow. A triangle wave two, A, B, C, D, and E. Straight away wave two, and then we've got wave one, wave two, again step down, wave one, wave two. So ones and twos and ones and twos and ones and twos. So third wave possibly. If it is, then it's going to be an amazing rally. 13th of December was the final low print in the VIX, which is again a bullish divergence scenario as compared to the stocks. This is what is keeping us floating to hold on to short positions on the indices. All right, so those are the stories. Let's bring it a pause here, and we'll be back again tomorrow with another short-term video update. Once again, thank you for watching, and as always, until the next one, please do take care and God bless. Goodbye.